Hey, what's up guys? It's Ezekiel here. So let me hit you with this. If you're still trading trend lines the way most traders do, you're playing a dangerous game. You see a bounce, you buy, right? You see a break, you chase, and then what? Boom! The market fakes you out, flips the script, and then leave you stuck and bleeding. Here's the truth. Trend lines, they don't actually fail. It's the traders that do. Because why? They're trading off their emotions, not the structure. So most setups are built to trap the masses. Then further on, reacting out of hope, fear, or FOMO, you're now handing your money to the market. So it's not how I trade, right? I wait for precision. I wait for structure. I wait for confirmation. Because that's what's gonna give you a real edge and consistent wins. So today, I'm not gonna show you one, not two, but 6 high probability trend line strategies that I've personally better tested over the years of real world trading, right? These setups are designed to flip the game, right? So you can stop guessing and start dominating, right? So if you have ever been faked out by breakout, you have been chopped up by a bounce, or you are just frustrated when the perfect trend line setup still failed, this video is going to change how you trade forever. Let's dive in. I'm Ezekiel, founder of Asia Forex Mentor. I've taught banks, trained thousands of traders worldwide, and developed a 3-step system that help them trade with confidence and precision. You are about to see a part of that in action. Okay, so most of you will know what a trend line is, right? But few actually understand how to use it to enter with precision. And then you ride the momentum and exit with control. And that's where the gap lies between the amateurs and the consistent traders. A trend line isn't just like a slope line that is drawn across the chart. This is a real-time representation of pressure. And when it's placed correctly, it acts like a decision line between what? Liquidity and intent in the market. In trading, price moves in waves. And that's a given. But hidden inside these waves are pivot points where the buyers or sellers, they are forced to act at those areas. So when you connect those pivot points with clarity, you are going to see the real structure of the market. So what you're going to learn in this video is not just how to draw a trend line, right? Anybody can teach you that. You are going to learn how to weaponize the trend line, how to combine it with momentum shifts, break of structures, liquidity traps, and most importantly, how to stack the probability. That's how real trades are built on stacked confirmations, not guessing, right? So whether you are a scalper, right, or whether you are a swing trader, right, trend lines will always have a place if you know how to use them the right way, right? So I'm going to show you the 6 different methods into trading trend lines. So regardless of the different scenarios that you face in the market, you can use either one of the 6. Good? Alright, so in strategy 1, I'm going to kick off and show you the exact method that I use to draw clean, accurate trend lines. So no guessing, no messy charts, right? Just precision from the very first line. Alright, so strategy number 1, the precision trend line strategy. If your trend line is off by a little, your entire trade timing is going to be off by a mile, right? So I don't draw trend lines to decorate the charts, right? I draw them to isolate pressure, right? It's where the market must respond, okay? Most traders, they draw trend lines, right? The professionals, they mark the zones. Right, so a proper trend line isn't just connecting 2 random highs or random lows. It is a calculated connection between where the market has clearly shifted. So what I teach is called the Precision Trendline Strategy. Right, so this is a method that uses what? High impact swing points, right? Not the noise. So here's how it works. Price, it leaves behind footprints. Right? When it strongly moves from one direction and then it pulls back, right? And then it reverses again, right? That's where the midpoint has turned, and that is the swing point. So you need at least 2 of these clear pivot areas to build your base. And then if you've got 3, it's going to give you strength. And if you've got more than that, now you're working with what? With data. It's no longer guesses. Alright, so when I draw the trend lines, I look at two things: clarity and consistency. That means what? Identifying the major swing highs or lows, right, that stand out, right, and they are visually clean cut. They are obvious. And what? They are sticking to what? Here's the key. To either the wicks or the bodies. Here's the thing. Don't mix both of them just to make the line fit your bias. No. Choose one approach and apply it with consistency. Right? So if you're going to use the wicks, use the wicks. If you're going to use the body all the way. Get it? And trend lines, they are not like, ooh, laser beam. They are zones. Right? Beams are thin. Right? They are more of zones. Right? They cover a range where the institutional traders are making decisions, right? So that's why I treat them as what? Reaction bands. They are not like singular type ropes, right? So as long as your line sits within that zone of influence and they are near major swings, it's valid, right? You don't have to like, oh, I got to over polish it, adjust it by adjust it. No. Just make sure it reflects where the traders must take action. I've seen traders, they obsess over the angle, the number of touches. Oh, you must have how many exact number of touches? Oh, which color is going to touch it? Which candlestick color is going to touch it? None of that matters if the line isn't built on actual structure. And structure always begin with one thing: momentum breaking and reversing. Okay, so that's the footprint of institutional flow, and that's where your trend line starts. So the next time you pull out a chart, you don't ask, oh, where can I draw a line? Ask instead, where did the market shift with force, right? And that's your foundation. Everything else is built from that. Okay, so now, I know what some of you are going to say, right? Hey, Ezekiel, every time I draw a trend line, the price, it fakes me out, right? I get stopped out, I chase the breakout, and then what happens? Boom, it reversals. So does it sound and seem familiar? There's a reason why that scenario keeps happening. It's because you're missing what? One critical step, right? Let me show you the fix for that. Right? So this is where strategy number 2 is going to come in. So this is how you can avoid falling for those traps, right? And you only take trades after the market confirms the real breakout. Alright, so most trend line breaks, they are not real breaks. They are traps. And if you cannot tell the real difference, you're going to keep entering on the wrong side of the market, right? You think it's going to break and then you enter on the wrong side. So you will know it's likely a fake when what? When what happens? Here we go. When the breakout candles, they are small and weak with what? With no big energetic candles, right? And they lack the momentum. So every trader wants to catch a breakout, right? They all want to catch the breakout. They all want to catch the start of the breakout. But the smart traders, they don't chase the first move. They wait for proof. Alright, so that's what I call the Fakeout Filter Strategy. Right, so this is a simple process to avoid getting trapped by the forced breakout. So in contrast, a true breakout is unmistakable, right? The market, it doesn't hesitate. It breaks what? It breaks with large energetic candles, right? Followed by what? Continuation. So even then, I don't enter right away. I wait for what comes next. Structure confirmation. So this means watching for a clean break of the previous swing point and then a retest. Only then do I enter. All right, so for bullish break, I want to see the market push past the last high, right? And then break it again, forming what? New higher highs, right? So then the second break, it confirms the strength. So I will then place my entry on the retest of the level that just broken, and often where all the fair value gaps or support zones are aligning. Quick pause. If you found this video helpful so far, here's something that always surprises me. 73% of you who watches this video regularly haven't subscribed yet. I mean, if you're getting value and want to support what we are doing, the best way is just to hit that subscribe button. It's free and really helps us to continue creating better content for you every single week. It truly means a whole lot to us. Okay, now let's get back to it. What if you have already filtered the breakout, you waited, you didn't chase, but then you still don't know exactly when to enter, right? That's where a lot of traders, they freeze. Right, where do I enter now? Here we go. There's a clear solution for that. So this is what I call strategy number 3, the retest and reload strategy. So this is how you let price comes to you and then it shows its hand, and then only then you load up with precision. You no longer hesitate anymore. There's no more chasing. This is the retest and reload strategy. We don't chase the breakout. The real trick is the retest, where the pros, they reload. Filtering the breakout, which is what I shown you earlier, is step 1, right? But where most traders still get it wrong is the entry, right? They either what? They jump in too late. Oh my gosh, right? Or they jump in too early. But a breakout, it means nothing without a retest. This is where the cleanest entries, they happen. Real momentum, it doesn't leave without pulling back first. Okay, it's 100%. Most of the time, it's going to be that way, right? And this is how the market works, right? There's no such thing as 100%. You're still going to see real momentum shoot off after a valid breakout. The market usually retraces to test the level that you have just broken. That is your reload zone, right? That's where we step the confirmation, right? And then we enter with precision, right? So this is what we call the retest and reload strategy. In an uptrend, after price breaks through the trend line and creates a new higher high, right? The market, what? It often returns to test that broken trend line or a nearby support zone, right? So that's where I prepare my entry, not on the breakout candle, but on the retest that confirms the intent. So I'm looking for what? Alignment, a broken trend line, a fair value gap, or a resistance that is turned support. And if those all stack in the same area, I know that the institutions are likely going to defend that zone, right? So I want to be entering where they are, not where all the retail traders, they panic buy at the start of the breakout. No. Right? The same applies for a bearish setup, right? When price breaks a trend line to the downside, I don't enter right away. I wait for the pullback into that broken zone, right? That old support now is now acting as a resistance, right? So once the rejection shows up, that's my trigger, right? So this simple shift, waiting for the retest instead of chasing the break, it gives you what? Better risk control. It's going to give you far cleaner setups. And when they are combined with structure confirmation, it puts you on the right side of the market, just as the next wave begins. I'm combining a lot of things, right? It's also the beginning of the next wave downwards. And that is the starting point as well, right? So most retail traders, they see the break, they jump in, with all the emotions. We wait for the return. We wait for the level to prove itself, right? So that's how you trade with control and not reaction, right? And that's how you stack probability, all right? You know, some of you may say, right, Ezekiel, what if the market, it doesn't break, right? You're telling me the market is going to break, right? What if it bounces off the trend line and takes off without me? You're right. Sometimes the bounce is the move itself. That's exactly why this next strategy comes in. So this one, it gives you the confidence to enter before the breakout. When the price respects the line, it stacks up with Confluence and tells you, I'm ready. All right, so this is the Confluence Bounce Strategy. Most traders, they want to trade off the trend line touch, but that's a mistake because trend lines on their own, it doesn't win trades, right? It's what happens at the trend line that matters. So what you need is confirmation. More importantly, confluence. So price doesn't bounce because of the line, right? It bounces because what? Multiple forces, they meet at the same place, right? This is what I call the Confluence Bounce Strategy. So when you combine trend lines with structure, support and resistance, price action confirmation, right? To enter only when the odds are now stacked in your favor, right? So the first step is identifying the trend. If price is making lower highs, right, and lower lows, you are in a downtrend, right? So this means what? You're only looking for short trades to sell. So if the market is making higher highs and higher lows, you are focusing on, this is the uptrend, right? Long trades. So the direction will come first. All right. So now, once you confirm the trend, whether it's uptrend or downtrend, right? You draw your trend line using 2 or more swing points. So in a downtrend, you connect the swing highs, right? In an uptrend, you connect the swing lows, right? So then you extend the line forward. So this is your guide. Remember I said a guide. This is not your signal. Then you look to the left of the chart. You check for key support or resistance level that have flipped. So if an old support in a downtrend has been broken, it's likely to act as a future resistance. So if that level aligns with your trend line, you have found what I call a confluence zone. So where multiple traders, they are watching the same area. All right, some are watching the support and resistance level, some are watching a trend line, some is watching something else. Right, so that's where the decision that gets made. That's where it all stacks up. Right, so don't enter just because price reached the zone. No. That's what amateurs they do, right? You need confirmation. So as price it approach to that area, you want to watch for signs of rejection. For example, it could be 2 bearish candles that is rejecting off the level in a downtrend. All right, so that's step 1, right? But still, that's not enough, right? The market can fake rejection and reverse. So here's the trick. Draw a short-term counter trend over the pullback. So in a downtrend, it's the mini uptrend that forms during the retrace. So when that counter trend line it breaks, it confirms that the momentum is shifting back to your favor. All right, so this is your entry signal. Good. So the short-term structure, it has now cracked already, right? And then it's aligning with the rejection from all the higher time frame zones, right? So you're no longer guessing anymore. You're following a confirmation from both directions. All right, so now let's flip it. In an uptrend, we confirm that price is making higher highs and higher lows, right? We draw our trend line below the swing lows, and then we check for support zone that lines up with that trend line, right? So that's our high probability confluence area. All right, so now price pulls back to the line, we then look for buying pressure. For example, price action bars. Example, let's say a long tail candle that is rejecting that level, right? Or multiple failed break attempts. Okay, so that's step number 1, right? Then what happens? We draw a mini trend line over the pullback itself. If price breaks through it, we confirm the bounce, right? So entry happens either at the close of the bullish candle or the break after that short-term break of trend line. All right, so some traders, they prefer to enter after a clean rejection candle forms. For example, let's say a bullish engulfing bar or a pin bar, right? That clearly it traps the sellers. Others, they prefer to wait for the break of the short-term trend line for extra confirmation, right? Either way works. Both are valid. Right, so remember this, the more the confluence, the stronger the trade, right? You are not trading a trend line touch. You are trading a decision zone that is backed by what? Structure, psychology, and price behavior at the area. All right, so now let's say you have spotted the bounce and then you entered now with confidence, but bam, what happens? It flips. The market, it punches through the trend line and then it reverses hard, right? So what? This is where we flip the script. Because why? Because when a bounce setup, it fails, it often becomes the best reversal setup if you know how to catch it. This is powerful. So this is strategy number 5. The trend line breakout reversal strategy, right? So this is designed to help you capitalize on all these failed bounce by riding the real move that follows after which. So this is where most traders, they get wiped out, most of them, right? Because they don't know when a bounce setup becomes a trend reversal opportunity. This is where we flip the playbook. Alright, so in trading, knowing where the trend ends is just as powerful as knowing where it begins, right? The start of the trend. So that is the foundation of this method, right? This is a precise, high probability way to trade when the structure collapses and a new trend begins. Alright, so let's be clear. A trend line breaking doesn't mean that the trend is over. Right? In fact, most breakouts, they are fake outs, right? They are just the noise that traps impatient traders. But when we see a real breakdown of structure, that's different, right? That's entirely different, right? So here's what we look for. Price, it fails to make a new high in an uptrend, right? Or a new low in a downtrend, right? Then what? Price forms a double top, right? In an uptrend, or a double bottom in a downtrend. This signals exhaustion, right? The strength is slowing down. Then what? The momentum, it stalls, and then it follows by what? Smaller candles. It means hesitation in the market. Then price breaks the trend line decisively. That is our first cue. So the market is no longer pulling back anymore. It is gearing up for a reverse, right? This moment is not just a break of the line. It is the collapse of the old trend to start the new trend. The engine of that move is now out of fuel, right? So here's the problem that most retail traders, the moment they see the break, they jump in. Don't do that. At this stage, the market is testing. It is poking the boundary. You don't just trade at a poke. You wait for the commitment, right? So what do we do, right? What do? We watch. We wait for additional confirmation that the reversal is real and not a trap, right? How? By looking for double rejection around the breakout area. All right, so let's say the market was in an uptrend. Price hits a resistance zone. It fails to break higher. It forms a double top and then breaks below the trend line. Okay, so this is no longer a trend continuation upwards, right? Now, here's the final edge, right? That separates the amateurs from the pros. I'm going to add that all in. You don't take a reversal setup on a 5-minute chart just because, you break the trend line, it looks nice. No. You go one level up. You go to the 1 hour chart and then you ask yourself, is this reversal supported by a bigger picture in a higher time frame? All right, so here's what we look for. Was there a breaker block, right, on the higher time frame? Did a liquidity sweep also occur on, in this case, the 1 hour time frame? Is price rejecting from a key resistance or order block in that time frame, right? So if it is, the setup is not just a valid setup, it's now aligned with institutional flow, right? So this is how you catch reversals that runs for hundreds of pips, right? Because you are not trading a counter trend move. You are now early in a start of a new trend entirely, right? We are now in a reversal territory. So the double top gives us the momentum cue, right? The trend line break, it gives us the structure shift. That is 2 layers of confirmation. And that's where we are finally ready to position. Then now, here's how we enter the trade using the rules of execution, right? Number 1, entry, right? We enter at the close of a confirmation candle, all right? For example, it could be a bearish engulfing bar, right? After a rejection, all right? Now, next, stop loss. Where do you put it? Just above the wick of the trap, right? Or the rejection candle, all right? Now, take profit. Where do you go? Put it at the next support or resistance area, right? Or you want to aim for, ideally speaking, for all trades, you want to aim for a risk to reward ratio at least 1:2, all right? I'm going to expand further on this top-down alignment that I've talked about. When you align your entries with momentum of higher time frames, this is a game changer. You stop guessing, right? Like, is this a high probability trade or not? No. You start looking at all this with pro positioning. One time frame might show you an entry, while the higher time frame could be quietly setting a trap. So if you want consistency, you need perspective, right? And it starts from mastering one skill that aligns everything. All right. So every trader, regardless of style, they have a primary time frame. They have their favorite trading time frame, the one that you execute your trades on. And on a higher time frame, it tells you what? The bigger perspective, the bigger context, the broader context, right? So here's how it breaks down. If you are trading on the 5-minute or the 15-minute time frame, your higher time frame is the hourly time frame. All right. If you're trading the hourly time frame, your higher time frame is the daily time frame. If you're trading the 4-hour time frame, you would reference the weekly time frame. And if you're trading the daily time frame, you now reference the monthly time frame. Right. So this is the zoom out effect. This is how you stay in sync with the market rhythm. Right. So top-down trend line analysis isn't a new setup. Right. It is through the lens which all your setups now becomes clearer, becomes sharper. All right, so you learn how to draw trend lines, you learn how to trade the bounce, you learn how to catch the breakouts, you learn how to write reversals. But if you don't understand where your setup fits in the bigger market picture, you are only still guessing, oh, maybe this is a reversal. But when you look at the bigger picture, maybe it's just a retracement in the bigger picture itself. Get it? Get it? So you got to align it, all right? This is the edge that brings everything together, all right? So if you want to level up your trading, don't just look at trend lines. You want to look through them. You want to zoom out. You line up your time frames, right? Line up your time frames and make sure that every trade has weight behind it, all right? This is how the seasoned traders, we stay ahead of the game. Okay, so now let's wrap it up. I didn't just show you a couple of tricks today. I gave you 6 strategies that most traders will never get their hands on. Right? So this is not some quick tip, right? This is a full-on masterclass on how to use trend lines to dominate the market. So every strategy that we covered, from the very first line that you draw to how you execute under pressure, was designed to give you what? Structure, clarity, control. So no matter what the market throws your way. All right, so now, before we wrap up, I want to say this. What separates a consistent trader from one who keeps getting wiped out is not how many lines you draw. It's whether you actually understand what they are telling you, right? And after today, you do, right? Because why? You got strategy number 1, the Precision Trendline Strategy, that shows you how to draw clean, sharp. There's no fluff trend lines without second guessing, right? And then strategy number 2, the Fakeout Filter Strategy. So you no longer get tricked by all the false breakouts. You wait, you watch, and then you strike when it's time. All right, then we talk about strategy number 3, the Retest and the Reload Strategy. So you're no longer chasing the market. You let price comes back to you, right? You are moving with the smart money. And what if it doesn't break out, right? The market bounce instead. That's where strategy number 4 comes in, the Confluence Bounce Strategy. When the trend lines at the trend line zones, where the price action meets and more, it's no longer that, oh, maybe this trend line is going to work. No, this becomes a high probability one. Now, what if the market flips the other way? After the bounce, it actually reversals. This is where you use the 5th strategy, which is the Breakout Reversal Strategy. That's where you actually spot the shift. You confirm the shift and then you ride it before the rest of the herd catches on. And then finally, number 6 strategy, where you put it all together, where you see a bigger perspective. That is the top-down alignment. This is the important one because I put it at the last. Because no matter how good your entry looks like at your preferred time frame, whether it's a 15-minute time frame, etc., right? It got to align with the bigger picture, right? That's how you stop reacting to all the noise and you start trading with the actual intention in the higher time frame, right? When you put it all together, what do you have? It's not just, oh, this is a setup, this is a setup, this is a setup. No, this is like a complete arsenal, right? So remember this, the trend line is no longer just, oh, I'm just going to draw some trend lines. No, it's now your weapon. Okay, so here's what to do next. I want to give you something that's going to change the way that you trade forever. So I've put together a free training that walks you through the exact 3-step system that I use to find high probability trades with sniper level entries, real risk control, and zero guesswork. So this is the same system that I use myself, and the same one that has helped thousands of traders go from frustration to consistent wins. And I'm giving it to you for free, right? There's no fluff, no fueler, just pure strategy. So if you ever wanted to trade with clarity and real conviction, this is the place to start. So click on the link in the description below and I'll see you inside the training.